Kia ora koutou, welcome to Face to Face. We've got back with us the wonderful Bernard Hickey, editor of Hive News. Kia ora, Bernard.
Kia ora.
And Bernard's here with us talking about what's really next for fiscal and monetary policy as potentially our interest rates go down to zero. So interesting hearing the Assistant Governor, I believe, talking about that recently.
Yeah, John McDermott came out and said, you know what, if we get down towards zero, we might need a bit of help from someone, particularly...
Which we've never heard before, right?
Yeah, that's right. They're saying monetary policy needs mates all the time, but he's saying, you know, all around the world, there's this issue where central banks get towards zero, and the fear is that they can't do much. It's a bit like flogging a dead horse. You know, the horse is just not moving. Maybe the horse needs a bit of help from someone else to, you know, feed it and drag it out of the mire. And the theory is, in the rest of the world, that governments need to step up and start spending some money, investing in infrastructure or training new workers or, you know, inventing a new bomb or whatever it is you do when you're trying to get your economy going.
We're not recommending that the government invents a new bomb, just
well,
to be clarified.
This is sort of interesting. The history of it, of fiscal policy and fiscal intervention, literally, that's the story of the 30s and the 40s and right through to the 60s and 70s. You had a war.
But in the 30s, in New Zealand, what did they do? They built houses, right?
Exactly. And so last time we were here, we had a depression, and we're not obviously there yet, or haven't been there in the last 7 or 8 years, but during the depression, the Labour government was elected to try and get out of the depression. And the thing that the government decided was to get Keynesian, you know, to essentially spend money to get the economy going again. And it got a bit of help actually from the Reserve Bank at the time. The Reserve Bank lent the government money to go and build houses, and not far from where we are now.
Isn't that printing money, Bernard?
Yes, well, it is printing money, and dirty little secret, they've been doing it all around the world, a lot in the last few years. You know, trillions of dollars a year of money is being invented out of nothing, really, for central banks to go and buy government bonds. Now, at the moment, they do it on the secondary market. So they turn up to a bank and say, hey, we'd like to buy some of those bonds, thank you very much. We're trying to push down long-term interest rates. And that's what happens to the point now where, for example, the US 10-year bond yield is around 1.5%, which is extraordinarily low. And also in Europe and Japan, interest rates are negative because central banks have been inventing money out of nowhere to go and buy these bonds.
So I give you $10 to look after and you give me back $9.50 or something like that.
Yeah, it's great luck, you know, for a government essentially. And unfortunately in Europe and Japan, and to an extent in the States, they've been sitting on their hands. They've got these very low interest rates and they've got central banks inventing money to buy bonds, and they haven't actually gone out and spent money. And so
And no one is, right? Because the whole idea of low interest rates is that someone's going to spend money.
Yeah.
Someone somewhere, you know, consumers will borrow money, businesses will borrow money, governments will borrow money, but nobody is.
No, that's the frustrating thing. There's a whole bunch of people who are nearing retirement, so they're nervous, and they see very low interest rates, and they think, gee, when I'm retired, the only money I'm going to get is from a term deposit or a bond. And if interest rates are very low, gee, I'm going to have to save even more. So what you have this bizarre paradox, which is lower interest rates encourage people to save even more. That's individuals, consumers. Businesses are nervous for whatever reason, big changes in technology, or they're just nervous about the future and so they're not investing. So that's where you need a government to step up. And John McDermott's saying, you know, this is a problem all around the world. And if New Zealand got into the situation of interest rates near zero, you know, Reserve Bank not really able to, you know, flog that dead horse anymore, it's time for the government to step up. And New Zealand's in a fantastic position, particularly compared to other countries, in that we have very low debt.
Government debt.
Government debt. So
private debt.
That's right.
Debt, yeah.
Government debt to GDP is going to be around 20% of GDP. Compared to other countries which have debt to GDP ratios of over 100%,
Yeah.
We're in a position, I mean, just imagine if you had a mortgage that was only worth 20% of the value of your house. You'd feel pretty confident about going out there and borrowing. So the government's in a position to do that. Now, either they can do it in their own right and not ask for help from the Reserve Bank, which they could do pretty easily. At the moment, 10-year government bond yields 2%. If the Reserve Bank cut to naught, then they'd be much lower than 2%. The government could borrow very cheaply to do it from the public.
So what you're saying, Bernard, is that the government, this isn't the time for government to be focusing on getting debt down. Potentially, if the Reserve Bank runs out of ammo, they should be saying, well, stuff debt. We actually need to get the economy going.
Yeah, and there's plenty of places the government could invest in. So housing for a start. And we've been here before. You know, in the 1930s, not far from where we're recording this interview, the first state house was built over in Miramar. And that was a big moment for New Zealand. And we were quite good in the last 50 to 70 years at building those houses. It's quite interesting. The government says right now that we're having the biggest building boom in our history. But actually, when you look at it, number of building consents per head of population, at the moment, only about 6 per 1,000 people. In 1974, we were doing 16 consents per 1,000 head of population in Auckland, because we were so good at building state houses and actually.
So that was government. That was a government-led.
Yeah. So the
right?
government guaranteed a lot of house building. It provided cheap loans, the state advances loan, and also. If you had a family, you could capitalise, you could essentially pull together all your child benefit payments to come up with a deposit to buy a state house. Right. And at that point, the government had a thing called the group building scheme, which is where the government said to a private developer and builder, hey, we will guarantee to buy this house off you if you can't sell it to a private individual. And that private individual, that family, could borrow the money from the government and only buy from this group building scheme. The end result, well, there's a whole bunch of big house developers, Fletcher Building, Fletcher Construction as it were, building these houses and lots of others. And this meant that we built lots of houses really quickly. New Zealand needs to build lots of houses really quickly, particularly in Auckland. And so that's one of the things you could do. And
giving
of course
the private sector the certainty to invest. Yeah.
Because there's not just the houses, then there's the roads and the schools and the hospitals and all that stuff. And that's where the government steps in.
So lots to spend money on. Bill, get out your checkbook.
That's right. And that's what the Reserve Bank would like you to do if we get down to zero. And if it was really, really serious, the Reserve Bank could buy those bonds off the government.
Right. So if we continue to flog a dead horse, if monetary policy doesn't work and we end up going down to 0% interest rates, to mix our metaphors, you want the white knight to come riding in to be the government, to spend some money on some stuff, infrastructure, including housing.
That's right. I'm the white knight. Lasso the horse, drag it out of the pit.
Thanks very much, Bernard Hickey. Thanks for watching that right till the end. If you'd like to stay in touch with what we do here at the Morgan Foundation, click here or visit us at morganfoundation.org.nz. Ideas to action.